Hi everybody, I want to introduce you to our very first webinar where I'm going to introduce you to the world's first Robo trading coach and explain to you a little bit about our company PsyQuation and show you how you can make more profits by avoiding trading mistakes. And those are trading mistakes we all make. So let's take a look at the content of today's webinar. Before I begin, I need to take care of some compliance housekeeping. So here's the disclaimer. We're a corporate authorized representative of an Australian financial services license holder. The information is intended to be general in nature and is not financial product advice. Investing in foreign exchange carries significant risks and is not suitable for all investors, and you should only trade with money you can afford to lose. We're going to start off briefly talking about the FX market. We'll discuss the problem that we all face. We'll tell you who we are. We're not a faceless company, we're real people. We'll tell you about our solution, and we'll go into some of the features of the product. And finally, we'll conclude with the benefits. So let's get going. And I just want to say that our company is 2 months old. We've been live 2 months. Things are really exciting at the moment. We're getting new customers every day. So let's start. I just wanted to give you an idea how big the Forex market is. The total daily turnover of the Forex market is $6 trillion. That is the biggest game in town by far. There's no other asset class that comes even close. The market is enormous. There are roughly 4 million retail FX traders. The statistic was taken a couple of years ago, so it may be a little bit dated, and I'd like to think it's actually quite a lot more than that, but let's for now say it's 4 million retail Forex traders. And if we look at the daily turnover of the retail market, it's $320 billion. That, in comparison to 6 trillion, shows you that the retail component is really small. And I'll highlight a point I want to make by just highlighting that comparison in a few slides. I'll take you through that. So let's just talk about some of the features of the FX market. To me, technology's been a game changer. The way we have seen advances in technology has really made trading so much easier for the man in the street and for all the asset classes, that is, but you've seen it come through for Forex even more so. Another thing is everyone can participate. No longer are we restricted by these large minimum account sizes that precluded people who didn't have money from participating in the Forex markets. I think everyone can participate today. Some accounts you can open for as little as $100. So, if you can't afford $100, then you really shouldn't be, in the Forex market. So I think it's available for everyone, and it's available 24 hours a day. The action is non-stop. The markets are open 24 hours a day, and that's been a great attraction for many people. Sometimes people are only able to trade after their work hours. So 24-hour action enables a large portion of the world population to participate. You can also trade from a smartphone or a desktop. You're no longer restricted by that. I probably do half my trades at the moment on a discretionary basis, that is. I do at least half my trades via my smartphone. So it's very efficient, and once again, with the advance in technology, smartphones are able to capture so much more on that small screen now. You're able to see, technical analysis, technical indicators. You can do a lot more, and that also is another reason why it's open to everyone, because some people don't have computers. So people who don't have computers only have a smartphone. Once again, they are able to participate in the marketplace. And then, very importantly, with all this increased liquidity, it has enabled the brokers to offer a lot more leverage. So if you can just think about it, with liquidity comes more efficient pricing, and with that liquidity, brokers are also able to lay off a lot of the risk. And because they're laying off so much risk, they feel able to offer more and more leverage. And that's a double-edged sword, which we will probably go into in a little bit more detail later on. But leverage has the ability to take a very small account. If you've been offered 200 to 1 leverage, just to give you a quick understanding of what I'm talking about when I say leverage. If you've got $1,000 in an account and you've been offered by the broker 200 to 1 leverage, that means you can, with your $1,000, you can trade equivalent to the size of $200,000. So clearly, if the markets go in your favor, you'll make a very high percentage return on your money. And as I said, it's a double-edged sword, because just as you can make so much money, you can lose it as well, equally quickly. And my final point I want to make on the market features is the competitiveness of the market. It's really important that we understand what this means. The Forex market is a zero-sum game. Basically, it means for every winner, there has to be a loser. So therefore, it's highly competitive. And I think we need to admit to ourselves who are competitors. The competitors we up against are your major investment banks, the commercial banks, the names such as Goldman Sachs, HSBC, Credit Suisse. These are big names, and they're your competitors. Equally so is the hedge funds. And then you have large and small speculators of professional money. I'm talking about professional speculators who are either large or small. They're your competitors. And we also need to acknowledge that our competitors have probably a lot more money than us, and they have access to some of the smartest brains in the world, and they also have access to people with a lot of experience. So know that you're competing against the best. And as I showed in an earlier slide, that the size of the retail market versus the global, the total market, the retail market's very small. So you should know that you're up against it. And that kind of leads into the problem, and the problem we're looking to address. 80% of retail Forex traders blow up their account in the first 6 months. Blow up is a strong term, but let me not sugarcoat it. What I mean by blow up means you lose enough money that you shut your account. So it doesn't necessarily mean it goes to zero, but you've taken a big enough knock that you either shut your account or you never trade again. And this typically takes place within the first 6 months of a trader's account. So it's a big problem, and the reason why such a high percentage of retail Forex traders blow up is because of the mistakes they make. Now, we all make mistakes. It doesn't matter who you are. And when it comes to trading, everybody makes mistakes as well. So even George Soros, John Paulson, the biggest names in town have all made and continue to make mistakes. But the difference with people who are successful and the people who are unsuccessful is people who make mistakes admit to those mistakes and learn from the mistakes and hope never to make them, and in most cases don't make them again. So we all make them, and here's just a couple of examples that I think we can all identify. Have you ever been paralyzed and unable to close a losing trade? I'm sure all of us have been in that position before. In fact, I watched a colleague go through this exact experience for the last 2 weeks. He just could not close out a position. He absolutely knew that he was doing something wrong, but he just refused to accept it. Have you ever increased your position size to get out of a drawdown quickly? We all go into drawdown. Drawdown meaning losing some of the money in our account. And the question is, have we wanted to get out of it so quickly that we've just doubled or tripled or quadrupled our position size just so we get out of that feeling of losing? And I think we can once again all acknowledge that this is something we've done. Have you ever traded for some excitement? I know I did last week. I had a couple of interesting runs. I was doing really nicely, and I then had no open positions, and something inside of me was looking for a little bit of excitement. So I started experimenting, and for my account size, I went and opened a trade on a symbol that didn't allow for very small lot sizes. And I kind of knew it, but I just went away. I went ahead anyway. That was a classic example of me looking for some excitement in the market, and that's a really bad thing to do when you're trading if you're trying to be successful as a trader. So I've just highlighted a couple. I'm going to go into a little bit more detail on this a little bit later, but I just want you to realize that we all make these mistakes, and the objective of the PsyQuation software is to help us eliminate as many of these mistakes as possible. And if we do so, we will certainly make more profits. Can't guarantee that you're going to become a profitable trader, because in order to become a profitable trader, it means you need to be able to beat the market. And that's not something we offer in here. PsyQuation is an overlay, a money management overlay system. So who are we? Well, let's start with the name, actually. PsyQuation. What does PsyQuation mean? Well, the Psy part of PsyQuation stands for psychology, and the equation part is equation. So I did a PhD in behavioral finance, and I have a deep interest in psychology and looking at market dynamics from the human nature side of things. And my colleague Vlad Kruglov has a PhD in mathematics, and he takes care of the hardcore equation side of the markets. Let me just tell you a little bit about the expertise of the company. Firstly, Vlad and myself, the co-founders, have been working together for more than 5 years. That is, speaking to each other every single day, or every single working day, let's put it like that. And we know each other inside out, and we bring a lot of complementary skills to the table. We have a combined 20 years plus of experience in the marketplace, and we've got a really strong team of experts. We've had 7 PhDs working on this particular project. We spent over a year in development, and something I'd like to highlight as well before going forward is we've looked at thousands and thousands of track records in our research. If I can I'll just show you. I'm not going to read through what our backgrounds are here. You can go to our website, psyquation.com, and you can read this in more detail. But what I do want to say is, when I say we've got thousands of track records in our research, what I wanted to just highlight on this point is that prior to PsyQuation, firstly, I was a fund manager for over a decade, so sat behind a screen every single day for hours and hours and hours, observing market action and price action. And after that is more recently, just before we launched PsyQuation, and I will elaborate what that means. Vlad and I, the second class, co-founders of an online incubation platform, and the third one are market alerts. We basically, so I'm going to just built an algorithm briefly now touch on what these are and explain the PsyQuation solution in the marketplace. And the negative alert. PsyQuation is a feedback loop alert system. What the hell does that mean? I'm sure you're all thinking feedback loops, now it's sounding all complicated and technical. Well, it's actually not. So let me go through it very briefly, and I'm sure you'll all understand what I mean. Firstly, the system scans through everyone's trades, and it's looking to identify risk and behavioral mistakes. So it's scanning everyone's trades, looking for mistakes. Once it finds that you've made a mistake, it alerts you and provides you with a corrective suggestion. So a remedial action, what you should go and do in order to avoid that mistake, or let's say to rectify the mistake. And then it monitors you post-alert behavior. So it's told you what you should do now because you've triggered an alert, and it's going to look and see what you do. Do you do anything, or you just ignore it? And here comes the fancy term feedback loop. All that it does is it goes, boom, it starts again and does it over and over again. And that's what a feedback loop alert system does. So it just keeps doing this, and in the hope that it identifies where you make mistakes, tells you how to correct them, watches that you're actually doing that, and if you do, hopefully over a period of time, once you keep bringing these mistakes to your consciousness, you will land up eventually either doing a lot less of them or completely eliminating these mistakes in the future. So what are the positive alerts? Well, what we realized is that if you're never making mistakes, so you're doing really well, you will have no engagement with the software, but because it'll just become very boring. You got nothing further to learn from the system. But we've also realized that because we've got such a cut back version on our dashboard, in other words, such a bare screen, we try and keep as much noise out of the software as possible. We don't want to we don't want to highlight all these important but overused indicators. What we've done is we've created a system whereby we will notify you at selective, I'm going to put it in inverted commas, in random points in your trading journey. We will notify you when you're doing something right. So to give you an example, you may actually be losing money, but you could be doing everything right from a trading point of view, from a good trading point of view. You might be doing everything right, but somehow the markets haven't really gone in your favor, because remember, trading is very much a statistical probability game. And what we thought would be very useful is to have that positive reinforcement. So here's the feedback loop alert system again, but here we've identified positive behavior. So you're really doing something well. And be it, I'm just going to highlight one point. So for instance, the amount of profits you make in relative to the amount of risk you take in, if that's positive, at selective points, you will be notified with a green alert as opposed to a red alert. And the whole idea behind it is that it will create positive reinforcement. We want you to feel good about doing the right thing. And sometimes you're actually not entirely sure, are you doing the right thing? Here we'll reinforce it, and we'll monitor your behavior after that alert. And then once again, you see the feedback. It just keeps running over and over again. Finally, let me tell you a bit about our third class in our alert structure. These are the market alerts. So to give you an example, we've just actually completed our volatility alert. What the idea here is, we want to bring to your attention when there seems to be a change in the environment in one of the symbols that you trade in, so one of the currencies you trade in. So yes, we all knew about the Brexit vote beforehand, so that was an event well notified in advance. But sometimes something happens in the world and it triggers an event that causes a change in the volatility structure of the market. And we run this fancy econometric, it's called a Gauch model. I don't want to go into that. It's really technical. It's unimportant. But basically, the point I want to make with our volatility alert is we'll be able to identify you when we see a change in current market conditions, and that these conditions are likely to persist. And therefore, you should be doing something. If this is something you weren't expecting, you either need to take evasive action, or you need to be on high alert and monitoring your positions and so forth. So that's what that's about. Another one is news trading. We've done some research relating to traders who trade around news events, and unfortunately, the the performance of trading around news is relatively the same as when you trade without news, without trading around news, except for one very important difference. News traders have more than 4 times, excuse me, news traders have almost 4 times the amount of volatility for the same amount of return that people who don't trade around news. So it's really not worth it unless you really believe that you've got an edge in this area, and our global statistics that we're using for our analysis doesn't represent you. So as a whole, I think it's not a good thing to do, and we will notify you as a market alert when a news event is coming up during the course of the day. So sometimes, there's so much happening globally that we often unaware of an event, get caught up in our day-to-day activities. It happened to me only this week with, I feel embarrassed to say so, but it was with the pound, with the central bank in the UK coming out with their interest rate decision, and I'd clean forgot about it, and I was trading sterling. So in future, you'll be able to know about these events in advance with our market alert. And without going into more of these market alerts, we've got a few ideas we're busy researching at the moment and hope to add them into the system pretty soon. So let me just tell you a little bit about some of the features and show you a little bit about the alerts. So firstly, there are only 2 things you need to do to activate the PsyQuation software. 2 things. And that is, we need you to input your target goal. So how much do you want to make per annum? What's your target? And what is your maximum acceptable loss? What is the drawdown that you're willing to accept for your account? So, in this example here, we've put a target of 71% annual target and only accepting a 15% return, 15% loss. So it's more than a profit factor of more than 4 here, which is really high. It says here you're in the Platinum League, and which places you in the top 10% of all traders in the PsyQuation universe. I'll touch on the PsyQuation universe a little bit later, but just to give you a little bit of an understanding what I'm talking about here, we have literally thousands and thousands of retail traders in our ecosystem that we are monitoring and using for research purposes. And based on that historic performance, this is where you place. So you can see there's a suggested goal over here, more to the left, because we're trying to encourage people to be more realistic. There's nothing worse than setting unrealistic goals, because when you go after unrealistic goals, you tend to do silly things, and research suggests that people who have unexpected goals and unrealistic goals do poorly in the end. And okay, let's go forward. So those are the only 2 things. Maybe I'll just add one further point on these 2 inputs we put in here. Based on your these 2 inputs of goal and acceptable loss, we're able to identify what kind of risk profile you have as a trader, and thereafter all the alerts that are of a risk nature are calibrated according to your profile. So there's some deep math behind that, and that's my partner Vlad's area of expertise. And so you could almost say that the sensitivity of the alerts are calibrated to your risk profile. So let's look at some of the PsyQuation features which make us unique and why we think it will really help your trading to use it. So one of the things we're going to talk about, well, I'll show you, is an intraday equity curve. I'll explain a bit about that shortly. Then I introduce you to our VAR adjusted equity curve. Very, very important indicator. It may be difficult at first to understand some of the detail, but I urge you to more look at the visual representation of what it's trying to show you, and let's leave the difficult technical stuff for now. You really don't need to understand it, the technical stuff to get benefit from the VAR adjusted equity curve. And then I'll just show you how the alerts look in the system. So here we finally get to meet the PsyQuation software, the dashboard, and I'm actually going to jump forward very quickly. Well, let me give you a quick overview. I'm just going to say on the top line, we show you the barest but the most important indicators which we think are relevant to you as a trader. As I said, in our opinion, most of the trading dashboards today invoke analysis through paralysis, and or I should maybe say the other way, paralysis through analysis. There's just too much, and it overwhelms you. You really don't know where to begin when you see so much information. So we've really cut it back to the absolute minimum, and that was why I said earlier that our alerts will notify you when important information is relevant for your trading. There's no need to see everything, because it just becomes noise. You don't take any information out of it. You just block it out. So I want to actually just show you two things on this chart on the dashboard. Introduce you to the green line, which is the intraday equity curve, and the yellow line, which is your VAR adjusted equity curve. So let me quickly tell you what an intraday equity curve is. Really, it is, I'm just thinking I'm going to jump ahead to the next slide before I tell you what the intraday equity curve is. But for the sake of just completing what I just started over here, every 15 minutes, the equity curve is updated, and hence intraday we can see lots of these movements up and down. But let me do what I said. Let me actually tell you firstly what is equity before I go into intraday equity curve. So let me just tell you briefly, non-technically, what is an equity. Equity is the amount of money you have in your account if you had to liquidate it right here and now. So it's the mark-to-market value of your account, the net liquidation value. Everyone's got their own slight different definition or different name for it, but all means the same thing. It means if all the positions that you're in or at the moment, according to where the market price is for those, that's what your equity is worth now. And what it means to say an intraday equity curve, it's just a representation in a graphical format where you show every 15 minutes you have a look at what is the account's equity, and you timestamp it every 15 minutes in this case, in our case, and show it on a chart. And just to let you know that we will be moving in the next few weeks down to a 5-minute intraday equity curve. So we'll be updating every 5 minutes what's happening with your equity. So let me tell you why I think it's important. Well, I know it's important for that matter. Here's an example of an equity curve that is only end of day. And you can see it's very, very smooth. It starts, and it's upward sloping from left to right, essentially meaning that as time goes on, this account is just growing in value every day. And it's almost as if there's no losses. According to this, it has no losses. So it's very easy to slip into a very comforting, you can become relaxed with, well, let me say it differently. It will make you feel too relaxed, and you'll probably think that this is going to go on forever. But let me show you what's actually taking place in this very same account, but now looking at it from an intraday equity curve point of view. So that was the top one is the daily data. The bottom one is the intraday data. And here you can see what's taking place during the course of the day. You can see there are large spikes down at these points here at the end of the day, or during the day, these points here. In fact, in this case, the account was almost down to zero. The drawdown was almost, but somehow, miraculously, at the end of the day, the account turned out profitable. And this is the way many, many people are trading the Forex markets today. And I don't want to go into the full details, what kind of trading strategies present this kind of performance, but they're your typical grid strategies or martingale or dollar cost average strategies. And more risk is taken, as you can see, in the hope that you can just get incrementally higher than you were the day before. And these kind of trading strategies end in tears. So if you looked at the blue line, the daily data, you would think, oh boy, this is an amazing strategy. I want to copy this guy. I want to give him my money, or I want to learn about his system because this is the way I want to trade. When you look at it on an intraday day basis, it's a totally different story. You would run for the hills if you had to see a strategy with these kind of intraday drawdowns. So that's the main reason behind showing you the intraday equity curve in PsyQuation, is to give you a good idea of the amount of risk you take in during the course of a trading day, and not blinding yourself to the fact that, oh, it's all good at the end of the day. It's all good at the end of the day until it's not, and that normally ends in tears most of the time. Let me introduce you to the VAR adjusted equity curve. So what is VAR? VAR stands for value at risk, and it's a very, very well known, well researched indicator or metric used by all the large institutional fund managers, banks, hedge funds. It's not to say for 1 second that it's infallible, but it's a highly respected tool to identify the amount of value at risk, as it. So I don't want to go into things like, what confidence level we at and all those kind of technical details. We'll do a whole separate tutorial on VAR and go into it in much more detail another time. But here on this chart, on the PsyQuation dashboard, you can see the green line is your equity curve. So in this case, it's minus 3%. So this particular account is losing 3%, almost 3%, minus 2.88%. And there is some trades open, and that is, you can see over here, there's a VAR currently open of minus 2.53%. So what we do is we just take, with the yellow line, we take what the equity curve is and we adjust it by the amount of VAR that is open. Meaning, in this example, I'll just show you over here at the end, as I said, the account was down 3%. With the current VAR open, if all things went against this particular account and the VAR level was hit, your equity curve would drop from minus 3 to minus 5%. So I kind of call the yellow line, the VAR adjusted equity curve, the safety net of where our account's performance is. So you can see over here, I just want to show you, there was clearly a large position opened at this particular point, and it clearly triggered an alert, a VAR alert. You can't see it here, but I know that it was a VAR alert, and triggered 2 VAR alerts actually. And you can just see the amount of additional risk that was taken into this trading account. And essentially, when we were sitting over here, this is where the equity curve, if things went really badly, it would drop down to here. And you could say that with 95% confidence. So let's not get too hung up on that. Here's a nice visual representation of what the alerts, or how the alerts present. Firstly, they present as a red pin on the equity curve, so we can see exactly where and when we were alerted to a particular alert. And you can see this pane here, we've got a pane called the alert indicator, which is really the sum of all open alerts. So if I go at this point here, I can see there were 24 alerts open at this point in time. This is a historic representation. And then the alerts all come out on this feed. We have an alerts feed, and it's essentially a log of all the alerts. So you can scroll down in time, through time, and have, oops, my golly, I just jumped ahead. Excuse me. And yeah, you can take a look at the log of all the alerts. Just want to also let you know that if you go into your profile settings on your PsyQuation software app, you can input your email address and your mobile number, so that the alerts can be sent to your inbox, your email inbox, and also to your phone. And that's really helpful, because we all know we don't sit with our screen open all the time. So you have the alert that pops up on your application, on your desktop, but then you can also get the alert via your phone and your email. We also represent the alerts on an alerts board, and we've borrowed the philosophy that most software developers use. They call it a Kanban board, and the whole idea behind a Kanban board is, when you develop in software, you break the jobs up into small, manageable parts, and the whole idea is you open up a task on the left, and you get to the point where they're fixed on the right. And this is how we've shown our alerts. Obviously, when there are many alerts, you could become overwhelmed. You wouldn't know how to, what should you do? How do you go about it? And following the alerts board process, it makes it very neat and easy to follow. So that's all on this particular chart. And then what we do is we have a page on our app which shows you your PsyQuation journey. And the whole idea behind this is to give you a visual representation, how you started, where you are currently, and where are you in relation to your goal. So you can see it quite nicely here. In this particular example, it's very progressive. You started down here, and you're currently over here, and your goals up here. But you can see along the way you've had some obstacles, and it's really cool. And once you get used to this, you'll notice how much it adds to your analysis of your trading journey. We also have a level indicator here, and I'm not going to go into the details of this particular scoring metric, but just so you know, it gets progressively harder to go further. And the idea really behind this is that we have built an algorithm that rewards you for dealing with your alerts, dealing positively with your alerts. So the more positive behavior that you exhibit, or more positive remedial behavior you exhibit, the more points you score and the higher you go in your PsyQuation journey. This is a list of some of the current alerts in the system, with a new alert expected to be added every month for the foreseeable future. Just so you know, as I mentioned, we spent more than a year in development, and alongside that we've got a team of data scientists, and it's something that both Vlad and I are extremely passionate about, is the research side of things. And we've got a team of data scientists who are working with us internally, and we have a large library of research we've built up, and we really want to be sure before we add things into the mix that they are well researched. So I'm just going to go through a couple of the alerts we currently have in the system. The value at risk, no need to go into too much detail there. It's one of our flagship alerts, and we know through backtesting our system across thousands and thousands of traders that if you follow our VAR alerts, you will add on average more than 25% return to your performance. That's what the statistics suggest. We've got a very intricate indicator that measures how optimally you are allocating your capital to your various trading strategies, and where you are seen to be over leveraging, we give you an alert with some advice how to correct it. This is not just because we don't like it, it's because all the research we've done and all the research we've read about suggests that martingale and dollar cost averaging and other variations of grid strategies are really not good for your trading. So where we see excessive exhibits of this kind of behavior, we will alert you. Try not to do it. It's very tempting because you do have, at least on a daily basis, you do have a high win loss ratio, but you are fooling yourself when you trade like that to think it's sustainable. We have an alert that measures the change of your behavior in drawdown. We know that, I call it the Brazilian spread. We know that when you get past a certain threshold in your drawdown, you become quite kind of desperate. You realize the end is near, and you say, to hell with this, I am going to bet the farm, trying to make all the losses back. And most of the time, it ends in tears. You will blow the account up. Don't do it. Duration alert. Many people think that they can trade for half a second and make money because or for 1 second or 2 seconds, whatever, a very short duration of time. But in many cases, people don't take into consideration the amount of volatility in the marketplace. There needs to be enough volatility, if you're doing this regularly, to at least compensate you for the cost of the trade. That is, you need to cross the spread, you need to pay a commission to the broker, and if the if your duration is very short, you ain't going to do it and cover costs. So when we identify that kind of behavior, we'll notify you. Redefining goals. What's this all about? Well, in many cases, people who aren't likely to achieve their goals they set out, all they do is they try and modify those goals. Well, let's say like this: if you were aiming to make a 50% per annum return, and suddenly things went bad and you're losing money and it seems so far away, you're likely to want to reduce that to maybe 20%. You talk yourself and say, 20% pretty good as well. I'm happy actually with 20%. Well, when you do that kind of behavior, it's really of a behavioral nature, we alert you. Another behavioral type of alert is ignoring alerts. We don't like to be told we're doing something wrong. I know for a fact that's probably one of my biggest pet hates. My wife, every time she tells me I'm doing something wrong, I want to block my ears. And I think we're all the same with regards our trading. We don't want to hear we're doing bad things. Well, when you keep ignoring alerts, we'll alert you as well. So at least you'll when you're feeling a little bit calmer and you go back and reflect on things, you'll see, you know what, I was actually ignoring all these alerts, and maybe I'll be a little bit more receptive to these alerts in the future. Stop loss. Some people justifiably can trade without a stop loss. They're very few. So most people need a stop loss. And if you don't have a stop loss on a particular trade, we will alert you to that as well, because there is a high probability you will take bigger losses than you had anticipated. Another one is capital allocated percentage. What this is reflecting on is, if you trade with a tight stop loss, you might trade very large positions, but you're only risking a very small percentage of your capital because you're trading with such a tight stop loss. So we'll monitor, our system's able to look at your stop losses in the system and see how far they are away from your particular entry point, and if we see that you're allocating what we believe statistically to be too high a percentage of your capital, we'll alert you to that. I'm probably getting quite technical here. I hope I'm not losing you guys along the way, but these are flagship alerts, and I think it's really important that you do understand some of the science or some of the thinking behind it. What is stop loss interference? And I've got it in brackets here, drop in. So let's just assume you've bought a particular currency and you have a stop loss just below your entry point, and when the trade starts to go against you, you start to lower the stop because you don't want to get hit. You don't want to accept your loss. This is a behavioral bias called loss aversion, and by dropping your stop loss, in this case dropping, you are avoiding taking the loss, and that is bad behavior, and we'll alert you to that as well. What is stop loss interference with regards the closeout? It's actually something I witnessed myself doing not so long ago, and I said we have to get this alert into the system. When you're trading and you have a stop loss, even if let's call it a trailing stop loss, or let's say you've gone into a nice profitable position and you've raised your stop loss, you're once again long. It's easier to explain it when you're long, and you've now raised your stop loss, and everything's fine, and you don't need to do you haven't reached your target yet, but you should be in the position until you stopped out, or until you've hit your profit target. What I've noticed a lot of people do is everything's going right, and you should be just leaving the trade to close, either hit the profit target to close out, or it should hit the stop loss. But instead, you know what you do? You close it out. And that's interfering with the stop loss. And we believe that's also a bad behavioral bias within your trading. I mentioned earlier the volatility. I'm not going to go into that alert. It's a market alert, and there are lots more to follow. There is no end in sight to the alerts we will have, and the way we've designed our research, we can collaborate with some of the best brains in the business. We've spoken to university professors at some of the leading schools globally who could potentially help us with some of these alerts, and we're really excited. So what are the benefits of using PsyQuation? Well, you get an unbiased expert, no ego, available 24/7. Your coach isn't, caught up in meetings or having a social event. The PsyQuation Robo trading coach is available 24/7, although you only need him or her 24/6, call it, because of the Sunday close. The robot learns from its environment. This is very important to understand, that it's not our alerts aren't static. They're continuously learning from the current environment. So the way to understand this is that we have a large body of knowledge made up of thousands and thousands of retail forex traders, and we've taught the robot how to profile what is positive behavior and what's negative behavior, and then things change. What might have been bad behavior 2 years ago may be not so bad, or maybe good in the current market environment, and it's important to take those changes into account, and that's what the PsyQuation robot does. It's complementary to an existing strategy. So the PsyQuation Robo Trading Coach is an overlay. It's a money management overlay to whatever strategy you're doing. It does not tell you which currency to buy or sell. It doesn't tell you when to buy or sell it. All we are doing is providing you a tool that is optimizing the way you're managing your money. It's in the cloud, which means there are no downloads and there's no uploads. You don't have to upload your trades. It all happens for you seamlessly. It's easily available through multiple broker partners. We already have a list of over 10 currently 10 reputable brokerage firms that you could partner with and trade, that we've partnered with. So any of these brokers are offering PsyQuation. We will provide you a weekly performance report. So even if you don't go into the application during the course of the week, but you are trading, and even if when you're not trading, you will still get a comprehensive weekly performance report with some interesting quantitative analysis, as well as suggestions and ideas about how to improve your trading going forward. And finally, very importantly, all of this is free. So the whole PsyQuation software is free to you, the user. We have partnered with your broker, and that's how we are compensated, through your brokerage firm. But there are no additional costs, and I need to emphasize, there's no spread widening, there's no markups on your commission. The PsyQuation service for every single trader is 100% free. So we think the benefits are enormous. We're really excited. We got so much more to do in terms of explaining to the man in the street the power and the benefits of our software. But it's good for everyone. It will help a really sophisticated trader, and it will help a rookie who has just started. It can be your guiding light. It can be your coach. And we look forward to seeing you guys. If you haven't already signed up a live account, we're really looking forward to working with you and helping you make more profits. Till the next time.